So the next sets of recorded lessons are going to be about economics in U.S. history. We're going to look at the three economic systems of capitalism, socialism, and communism. And we're going to look at the two major political parties, conservative party, conservatism, which is the Republican Party, and liberalism, which is the Democratic Party, and how economics plays into these parties. And you may be wondering, well, why do I have to learn about economics in a U.S. history class? Well, the truth of the matter is economics plays a huge role in a lot of the things that go on in U.S. history. So if you don't understand some very simple to understand, very basic economics, you'll have a hard time understanding questions. You'll have a hard time understanding what's going on. For example, when we study the Great Depression, if you don't understand supply and demand, if you don't understand social regulations and economic regulations, you're going to have a really hard time understanding what's going on during this time period. Think to the Cold War. If you don't understand communism and capitalism, you're not going to understand why we were even involved in a Cold War and what the fight was about. So that's what the next set of lessons are going to be about. Is going to be about the isms. And today we're going to look at capitalism because that's what America's economic system is, and it's important to understand that for a U.S. history course. So the basic definition of capitalism. Capitalism is an economic system in which trade, industry, and the means of production are largely or entirely privately owned and operated for profit. Central characteristics of capitalism include capital accumulation, competitive markets, and wage labor. In a capitalist economy, the parties to a transaction typically determine the prices at which assets, goods, and services are exchanged. So we're going to take this definition and we're going to break it down and sort of explain it in a U.S. history context and really get an idea of what capitalism is. So the big thing that you want to understand about capitalism is that it's for profit, right? Think about McDonald's, Walmart, small mom and pop stores down the road. What are they trying to do? They're trying to make a profit. And it's important to note that all of the means of production, and what I mean, that's an economic term that you need to know, all of the parts of the company are owned by the individual. They are owned and operated not by the government. They are owned by the individual. So, for example, McDonald's can decide to sell their hamburgers for $10, or they can decide to sell their hamburgers for $2. And it's all going to be based upon something that we'll look at in a minute on supply and demand. What can they sell their hamburgers for? What will people buy those hamburgers for? And they can still make a profit. They're not going to make it for free, right? They're not selling hamburgers for free. So the opposite of capitalism is going to be communism, where everything is owned by the government. The government says, well, you're going to make 10 hamburgers and you're going to sell those 10 hamburgers for $10 or $1 a piece. Doesn't matter whether it's at a loss, doesn't matter whether it's at a profit, that's what the government decides. And the government will own the wheat that makes the buns, and they will own the cattle that makes the hamburgers. They're going to own the land that the store is on. Everything's owned and decided by the government, which makes it really difficult to set prices, right? Well, how does the government know how much to sell that hamburger for, right? They have to say, okay, they have to be able to determine how many people are going to buy those hamburgers. And it's a lot of decisions have to go into what the price will be. And in a capitalist economy, it's going to be determined by something called supply and demand. That's how the prices are going to get set. Before we get into supply and demand, I want to look at one other term that you need to be familiar with, and that's something called laissez-faire economics. And laissez-faire economics is this idea started by a man named Adam Smith, which says that the government needs to stay out of private business. They need to let individuals make their businesses, and the government should not be involved. And so, of course, you can see that immediately is the opposite of communism, where the government controls everything. And America was founded, when we first started, on this idea very little government intervention. And as we study history, we're going to see more and more government involvement through social regulations and economic regulations. And it's important to note that it started out with this idea of complete sort of this idealistic idea that in a capitalist society where there was no regulation in government. And we'll see some of the pitfalls and some of the advantages of it as we study U.S. history. So, in an idealistic world where the government is not involved, prices are set through something called supply and demand, not by the government. So what is supply and demand? Supply, let's just break it down. Supply is the amount of something, right? So how many hamburgers are being made. Demand is going to be how many are being bought, how many people are coming into the store and buying those hamburgers. And it works, you can think of it in very simple terms. Think of supply, if there's a lot of hamburgers and they can't sell them, they have to lower the price, right? So there's a sale. Think about it, Christmas, after Christmas, they overestimated how many red sweaters people wanted, and you get this great sale that you can go and get a great red sweater. But think about before Christmas, if they didn't make enough red sweaters and there's a huge demand for red sweaters, well, all of a sudden, that red sweater is worth, you may normally pay $10, all of a sudden you're paying $20 because there's not a lot of them available. Of course, the opposite is true if you think about it on the demand side. Demand is greater. If the demand is greater, the supply is going to rise. Then demand is greater than supply, the price is going to rise, and you're going to end up with shortages, right? There's not going to be enough produced. If demand is lower than supply, you get a surplus. And the fantastic thing about supply and demand is that you can map it you can map supply and demand on a grid. This is what it would look like. And so you're always going to see supply and demand with the price on the right, on the vertical axis. So 1, 2, 3, 4, 5, and 6 is your price. And you're going to have the demand, or the amount wanted, on your horizontal. And that's going to be 10 shirts, 20 shirts, 30 shirts, 40 shirts, 50 shirts, 60 shirts. So demand is always going to be downward sloping. So you can see that if there are 10 sweaters, they can sell 10 sweaters at $5, but as you go down and the price gets cheaper, so if for $1, people are going to demand more sweaters at $1, right? I mean, I'm going to buy more of something if I can get it for less, right? I'm going to buy more hamburgers at $1 than I would at $5. People are always looking for that deal, right? So supply works in the opposite direction. It's always going to be upward sloping. So if they can produce 60 and get $5 for it, they're going to produce more. But there's a balance, right? People are not going to pay $500 for a hamburger. They only want to pay, let's say, $3. So the market is going to come out with what's called equilibrium, and that's where the two things cross. It's going to be where you get your price, is where supply and demand cross. So for example, if this was sweaters, we can see that they can sell, 35 sweaters at $2.50. That's their price. That's what the market will bear, and that's what we call equilibrium. So it's important to understand. So if you're looking at a U.S. history class and you're going through, you have to be able to determine a lot of times, well, what is the supply and what is the demand? And they may show you price and demand and ask you some questions using this graph. So make sure that you understand how to read it. Make sure you understand what capitalism is, and that America was based originally off this idea of free markets, supply and demand, and very little government intervention. But then as we move through history, we're going to start seeing that change, and you need to be able to recognize that change. But in a very brief nutshell, that is capitalism.